Hello traders, Rich here and welcome to a new episode on how to analyze any chart from scratch without using any indicators, just by applying basic price action concepts and market structure 101. So let's get started, and as usual, cheers. Today we have episode number 17, which is a Forex pair and NZD-JPY. And if you aren't familiar with this series, don't worry, I'll make sure to attach the playlist, which includes all the previous episodes in the description below. For those who watched the previous videos, already know that we always start from higher time frames, like weekly and daily, to know where we stand at the market. Are we overall bullish, bearish, or stuck inside the range? And of course, as price approaches the lower bound, it can be horizontal, just like this one, or non-horizontal, which is considered our support. We'll be looking for buy setups. And as price approaches the upper bound, it can be also horizontal or non-horizontal, just like these two. We'll be looking for sell setups. So let's start with the weekly time frame. And as usual, we have three kinds of rejections. We have our support and resistance, where we have many failed attempts to break above or below a certain area. One. Second, we have our trend lines, which are non-horizontal support and resistance. And we also have supply and demand zones. So let's start with our support and resistance. The way to do it is very simple. You simply draw a line on your chart, a random one, and then you drag and drop it in a way to connect as many swings as possible. And we want big swing and not just like very minor swings, right? So the bigger the swing, the stronger the support and resistance would be. And we need at least, and of course, as per my trading plan, I need at least 3 rejections. That can be a high and a low. For example, here we've got like 1, 2, and 3. So it is a valid support and resistance. That doesn't really matter if it's like 3 highs or 3 lows. It can be 2 highs, 1 low, or 2 lows and 1 high. So let's do it together. It's very simple. So here, for example, we've got like this major swing high, but we only have one failed attempt to break above it and below it. But I would keep this anyway, even though it's not a typical support and resistance, because it's the all-time high, right? So I can't remove it. Let's go for 4, I guess. Yes, or let's go for, you know what? Let's keep it 97, which is a stronger round number. Now, let's continue. We also have only one here. We don't have a typical support and resistance. If you go down, only one. So I'll fast forward a little bit. If you scroll lower, we can't really see much. We only have 1 and then 2 maybe, but then price like broke up and downwards. So it's not a strong one. But if we go lower, we can see that we've got this one, which is a very strong one and has been respected recently as well. So it was acting as a support previously, 1, 2, and 3, and then price broke it downward. It's now what? A resistance, 1, 2, and 3. So it's still a valid one, and as price approaches it, we'll be looking for sell setups. And of course, our support and resistance are zones on our charts and not laser lines. So don't draw it like a line. If you want to draw it like me, like a line, treat it as a zone and not a laser line. Or if you'd like, you have 2 options. The first one is you draw an actual zone, just like this one, right? This is the entire zone. So we've got also rejection here, rejection here, rejection here, and so on. So now it's covering more swings, which makes more sense and makes it stronger. Or you can also do like this, which I personally like. I don't like to draw a zone because when you zoom into lower time frames, we can see it like a big background, right? And I don't like this. I like to keep my charts as clean as possible. What I do is, let's go for 85. Okay, let's go for 85 and 84 or 83. Let's see. Fantastic, 83.5. This is our entire zone, and you will see it now. I just like, instead of making a big zone like this, I just made 2 laser levels, but which will like identify the upper bound and lower bound, and this zone is actually covering these ones as well. So it's actually a very strong support and resistance area. Next, let's move forward. Since we have green here, let's go for blue now. That's how you keep your chart as clean as possible. So we scroll back down. We already have this one here. So let's move forward. I don't see much, only one here, one here. Price here is not respecting it, not respecting it. So we don't have anything to mention. We need clear one, and remember, we are on weekly. Of course, now in a bit, we'll zoom into daily and we'll do the same process. So if you didn't see a supply and resistance on weekly, don't worry, you will be able to see it from daily, which is a shorter term perspective. So let's go for here. I can't see a lot. Here we go. We've got a very, very strong one here. It has been respected many times. Resistance previously, broken upward, support now. Now price here didn't respect it, but then respected it here, right? And then broke upward, support here, support, price here like got choppy around because it's an entire zone, not that there's a level. And price broke upward, support, and then price broke it downward, resistance, and so on. Then price, now recently, price broke it upward, now acting as a support area. So as price approaches it, we'll be looking for what? For buy setups. Of course, again and again, it's an entire zone, not a laser level. So let's do like this. Let's go for 73.5. I always like to make it round numbers, as you already noticed, and 75. And as you noticed, the difference between these two is 1.5 and 1.5. And as you can see, the same as well here. So this is our second support and resistance. I can see a very, very obvious one, which I gave you an example about it like 10 minutes ago or 5 minutes ago, which is here, right? So let's go for green. Here we go. It's actually a massive one, has been respected very, very well previously. And look here how many rejections we had from it. Then price broke it upward, and next time price retested it was here, then price rejected. And as you can see, the swings from it are very, very strong. So the upper ones are also strong, but look how the swings from this one are major ones, right? And now price then tested it here, rejected it, then price broke it up, downward, upward again, and then respected it here. Of course, it's also an entire zone, and since I like the difference for this one for 1.5, let's do also 1.5. So let's go for 69. Okay, it's an interesting number, right? So, and then let's go for 67.5. So now we are like it happens, right? So it doesn't have to be always equal, but I like to keep it visually equal, for a better visual. So as you can see, this is the zone covering the entire swings, the entire rejections. And as you can see here now, it was a fake out previously of this upper one, but it is still inside the entire support, right? So I always make sure to save your charts, not to for example, when you draw your levels, not to lose them in case the browser crashes. And I don't see anything in the middle. Let's fast forward. We've got a very strong one here, many rejections from it. It's also an entire zone. So let's go for 56. Let's try 0.5. Okay. And 50 what? 58. I'll see if I make them higher. Okay, yes. So should make them 58.5. Here we go. And 57. But it doesn't really matter the exact number because it's an entire zone and you wouldn't be buying blindly around it. You'll be looking for buy setups. And of course, if price breaks it, for price to break it downward, we'll need a very strong break. For example, like this, for this one to be broken upward, we'll need multiple candles breaking it up and not only a wick. For example, here it's still acting as a resistance, while here we had multiple candles breaking above it. Now it's confirmed to be acting as a support, and we were looking for buy on the retest multiple times. And this is our resistance previously, which is indeed a very, very strong one. So let's move forward. Here we go. So here are our support and resistance from weekly time frame. Now let's zoom in and try to go for trend lines. And let me check one more time quickly to see if we have anything in the middle. We don't have anything here. Of course, we don't have anything here. Let's see. I can see one here, but I guess we'll see it better from daily time frame. I can see one here, many rejections from it. This one is a minor one, so it doesn't count, but we've got many rejections here, right? Here as well, and recently price rejected it, and he will also have a rejection from it. But I guess we'll see it better from daily time frame. So what I'll do is I'll make it an orange, so we'll know that we have to refine it from daily time frame. But here are the main ones, the bigger ones from weekly time frame, the long-term ones. Before we zoom into daily time frame, let's go for our supply and demand zones and trend lines. Now we can clearly see, we don't have to draw a trend line to see it, that we were overall very bearish previously, and we could also draw this trend line, right? And I always like to draw it in brown on higher time frames. Of course, you can make an offset for it to cover the entire structure. So we were overall bearish, of course, from a long-term perspective. Then price broke it upwards, so now the momentum is shifted from bearish to bullish, right? And it's actually market structure 101. Price was making lower highs and lower lows, right? Then the price failed to make a lower low, instead made a higher low, which gave us an early alert that a potential reversal might happen, that the bears are tired and not able to push lower as they were doing before. But for extra confirmation, we need the bulls to prove control by breaking above the high. And if you also would like to see it better, we also have a giant head and shoulders pattern. We've got our right shoulder, our head, and our left shoulder, head and right shoulder. It's not like the typical one, it's just for overall direction and to feed the market. Here is our neckline covering the entire structure, which also happens to be our previous support area, which we drew from weekly time frame. From a zoomed out perspective, I mean. So price broke the neckline, retested the neckline, and rejected the support, which is also the neckline. So now we are overall bullish because we had the shift in momentum. Price broke above the neckline, retested it, and we are currently in this impulse phase. So we have this impulse correction. We are currently in this impulse. We can expect a correction, and then the next impulse till the next resistance, where we'll be looking for sell setups. Right, so this is how you zoom in and to feel the market about where you currently are. We are overall bullish. We are currently in this small correction, but since we are overall bullish and approaching a support, which we'll see better from daily time frame, this is why we'll be looking for trend following buy setups in this case. Now, since this one is already broken, I will delete it. And we can see that we can also draw, since we were overall bearish, now we are overall bullish. So let's try to draw also a trend line to cover the entire movement upward. And you can see that the price is making higher highs and higher lows, and we can draw this channel. I'll also keep it in brown and make it appear on all time frames, because as usual, what I draw on one time frame, I want to see it on a lower time frame, but I don't want to see it on monthly. I don't want to see it on a higher time frame. For example, if I draw a trend line on H4, I want to see it on H4, H1, and 30, but I don't want to see it on daily and weekly. So in this particular case, I want to see it on lower time frames. And of course, I always like to make an offset for it, just like this one in this particular case. So now we know that, and of course you can refine it a little bit, make it higher, make it lower, like this to touch as many wicks or swings as possible. So this is our overall movement. We know that we are impulse, overall bullish, impulse correction. We are currently here waiting for the correction to look for buy setups. And we know that price can still reject this area before reaching the lower brown trend line, because we have a support here, right? So now, anyway, from weekly, we can see now our support and resistance even better, but we'll see it better from daily time frame. So this is from weekly, and of course, let's go for supply demand zones before we zoom into daily. Okay, we want explosive movements upward or downward, right? So we have this one, an explosive movement upward. So we've got a demand zone here, but I will not draw it because we already have a support. So to keep the chart clean, we also had a demand zone here, explosive movement upward. And recently we had this demand zone here, which lines up perfectly with our lower brown trend line. So this is how you put the puzzle together. This is how you have an edge over the market, because many confluences or many tools, clues, things, whatever you want to call it, are telling you that this is an actual strong area to that price might reject. So for those who only use supply and demand zones, we'll be looking for buy setups here. For those who only use trend lines, we'll be looking for buy setups here. For those who know market structure, we're looking for buy. For those who are using support, right? So this is how you put the edge and you put the odds in your favor to have an edge over the market. You have a demand, but of course also I will not draw it because to make the chart clean. We already are looking for a buy, no matter if we have a demand zone or not. That's it for weekly time frame. Now let's zoom, and as you can see, most of the work is done on higher time frames. You will see now that how much time we spent sorry, on weekly and daily, but then you'll see that on lower time frames, like we will do it very quickly. So most of the work is done on higher time frames. Then you save your chart because you will not do it all over again. Next week, you just open the chart, make your updates, and that's it. Right? So you only like spend most of the time only once, and of course, like you update the weekly view every couple of months. Let me take a break and then continue on daily. So from daily time frame, of course, when we draw many supply resistance from weekly, we can't really find a lot on daily time frame, but we still zoom in, and especially in this case, because we want to refine this one. So we've got our lower bound, our upper bound. So we've got now this floor. As price approaches the upper or the ceiling or the upper bound, we'll be looking for buy. As price approaches the floor or lower bound, we'll be looking, sorry, for a sell here, and we'll be looking for a buy around here. But since we also have this trend line in brown, so we are also looking for buy setups around it. So even if you don't have this trend line, we'll be also looking for buy. But let's see and try to refine this one. We've got actually many rejections from it. As you can see, we've got here 1, 2, 3, 4. Actually, a very strong one. And as you can see, around 79. So let's make it 79. And you know what? I'll keep it in orange since we have green and blue here. So we know that the green and blue are from weekly and the orange one is from daily. Don't like to use red here because I use the red for the triggers, for the trend lines on lower time frames. And of course, it's an entire zone. So let's do like this around, and it's a small zone actually, not like 1.5 difference, just like the previous ones. It's only like a 0.5 difference for this particular one, or even you can make it a little bit bigger to cover more swings. For example, you know what? Let's do 1 difference around 78 to cover these ones as well. So that's it. I can't really add more supply and demand zones because we already have this one, which we found on weekly time frame. So for now, what we know is we are bullish in the correction phase, waiting for the bulls to take over again to catch the next impulse. The bulls can kick in here, or it can like dive a little bit deeper, go flat to test the intersection of the support and the demand and the trend line before going upward. But as price approaches this one, even if it was like steep before like retesting the 3 rejections, we will be still looking for buy because the buyers would be very strong in this case and can still trade higher from this particular area. So now we are done with the weekly time frame and daily. We know where we stand at the market. Now we zoom into lower time frames to look in this case for what? For buy setups. If you zoom into H4 time frame, we can see that we are overall bearish. We were overall bullish. Previously, we had this big impulse movement. So impulse, flat correction, impulse, flat correction, then impulse. Then the like price got stuck inside this range, then broke below the previous low, a break, a classic retest of this trend line. Okay, so it's getting a little bit choppy here, so let's delete these ones. So broke below the previous low, retest, and then we had this lower low, lower high. So we are currently overall bearish, and since price is approaching this lower support, this is why we are looking for buy setups. Of course, it's an entire zone. It can be a little bit higher or lower, and this is our demand zone, which we saw from daily and weekly time frame, an aggressive movement upward from it. So now we are looking for buy setups, and I posted analysis on TradingView like last week that we have this trend line and we are waiting for a break above it, and it's like a wedge pattern, right? So it was like this, and let's make it in green because I want to draw another one in red. So here we go. I posted this one that I'm waiting for the trend line to be broken, and the filter for those who already know from the previous videos, we don't actually buy on the trend line break because it's also a zone and not a laser level. We always go for the last swing high break to confirm that the buyers are taking over, which didn't happen in this case. So this filter saved us from a fake breakout. And then the price kept trading lower and lower. So we are still bearish. The bulls failed to break above the high, instead still making lower highs and lower lows. Now, the price, this is our current or last trigger that we are waiting for. So let's keep it if you want. And now, this is why I told you I want to draw another one in red. Now the price is trading inside this. So like very, very simple. We are just waiting for price to approach a rejection, and then from a simple market structure, and now from H4 you can even zoom in, but now since it's obvious and everything is clear from H4, we don't need to zoom into our time frames, right? So very simple, wait for price to approach a rejection zone, go for market structure, wait for the buyers or a shift in momentum from bears to bulls, or vice versa. It depends on where you are in the market, and then you look to enter your trades, right? So in this case, we were bearish, and we know that it's going flat because like a wedge pattern is a stronger reversal pattern than a channel, because it means that even though we are still bearish, making lower lows and lower highs, the bears aren't able to make deep low lows to form a channel. Instead, the lower one is flat, which means that the buyers are trying to push higher, not letting the bears trade any lower. But the bears are still in control. The sellers are still in control, as they are still be able to make lower lows. And so flat, and now it's even more flat, as you can see, and you can see it visually, right? So it's like more of a range in the shape of a falling channel. So for now, we are still overall bearish, waiting for the buyers or for the bulls to break above what? Above the swing high, which is our last swing high. Technically, our last swing high is here, but if you look left, it's also here. And if you get a little bit higher for extra confirmation, it would be around this area. So I'll keep it as is for now. The upper bound, the upper one, which is in fact what? In fact, it's the last high of this trend line, and I can make it a little bit lower if you want, if I want to cover as many as possible. And if you don't want to draw it as a zone, you can simply go for ray, which is, what is it? Horizontal ray, and you can do like this. Here we go, right? So, but I personally like to draw an actual gray zone. So long story short, while I'm approaching a support, right? So this is how like fast the lower time frames are, because we already know where we are in the market. Most of the work is done on higher time frames, and actually half of the work is done around daily and weekly, because like trading, if you want to have an edge, you have to do things to care about. The first one is what to look for a buy or for a sell. This is like half of the work, and then the actual entry. So half of the work, if you want to look for a buy or a sell, is half of the work already done on higher time frame. On H4, we know that we are looking for a buy. We just look to get extra confirmation to have a shift in momentum for the buyers in this case to take over. So long story short, or in brief, we are overall bearish. The bears are exhausted. We are going flat, right? So we were bullish, we went flat, and in this case, like it's a horizontal range, and then we had a break. Now it's a falling range. We're going flat, means that the bulls might take over very soon. However, the sellers can still trade lower and lower till the support before going higher. So technically, we are still overall bearish, waiting for the bulls to break above this area. If the bulls manage to break it here, we can actually enter a buy, of course, with a stop loss below the previous swing low, and we target a 1 to 2 risk reward, which would be around the upper bound, around the upper resistance, where we'll be looking for sell setups. So actually, if you zoom out, here we go. This is our upper bound where we'll be looking for a sell. And this is the lower bound where we'll be looking for a buy. This is like the arrows that you see me drawing. So when I like open my chart again, I immediately know what I'm looking for. And we have a support here and the demand as well. That's why we are looking for buy starting from now. And meanwhile, okay, fantastic. And meanwhile, until the buyers to take over, would be overall bearish, and this one can still trade lower and lower. And if price kept trading lower from here, we can actually zoom into lower time frames now to look for buy setups. We can even extend this trend line, which can act as a non-horizontal support with the intersection of this horizontal support. You can even zoom into M30 and look to catch this impulse movement upward as the price would be oversold. Anyway, let's keep it simple. Because like I can't include everything, every possible scenario in this video because like anything can happen. Trading is reactive, not predictive, so I can't really know what might happen next. But I try to cover as many scenarios as possible, waiting for this one to be broken. Or if price kept trading lower, we'll be looking for actual new buy setups, as it can still go flat till here before going up, or go down, up, and then range, and then up again, or break it upward now, and then we'll be looking for sell, and we'll enter actually a buy around this area. That's it for NZD JPY. Best of luck, and I'll see you on the next episode.